Well, that was incredible. What was behind this crazy earnings call? What does this earnings call mean for Tesla stock going forward? I'll answer those questions for you right now. Welcome back, everyone. In this video, we will cover a recap of Tesla Q1 earnings report. We'll do a balance sheet breakdown and what does it mean for Tesla stock moving forward. And if you like making money, like every Tesla stock owner did after that earnings report, go ahead and subscribe, hit that little notifications bell, and while you're down there, go and give the video a like as well. That was actually my legit phone beeping at almost the same time I said like. Tell me that showed up on the microphone. I talked about it in my last video, which was not meant to be a I think Tesla sucks video or a Tesla is in the toilet video, as so many of the people down in the comments seem to think I was doing. I wasn't. I was simply showing the other side of the coin of what could happen if this all went south. And if you got to the end of the video, I reiterated the path to $1,000 per share. And lo and behold, almost everything that needed to go right did. GDP numbers were bad, but in line with expectations. The Fed essentially said, unlimited money for all my friends. The FANG group nailed their earnings reports so far. And of course, Tesla nailed all of their numbers. And they didn't adjust their guidance down at all. Quite literally the perfect storm. In a good way. So let's hit the highlights of their earnings reports. Recap of the Q1 earnings reports. I really want to highlight three things out of this quarterly earnings report. The first, Tesla posted a surprise profit in the first quarter. Tesla said it earned 9 cents a share in the first quarter versus a loss of $4.10 a share in the first quarter of last year. Analysts had expected Tesla to report an adjusted loss of 28 cents a share on sales of $6.1 billion. But that obviously didn't happen. Tesla blew the doors off of that. In the letter to the shareholders, that's, you and I, right? They said it was the first time in our history that we have achieved a positive GAAP net income in the seasonally weak first quarter. Despite global operations challenges, we were able to achieve our best first quarter for both production and deliveries. Essentially, Tesla rocked the first quarter like never before. The second highlight in there was the Model Y starting off so well. The Model Y is the company's path forward for this year and probably the next year as well. So it was an encouraging sign to see that the vehicle's launch is not only going much better than expected, but it's been free of all the major drama that surrounded the Model 3. Hey, yes, I know there are plenty of articles and videos out there stating to the contrary, but the earnings report proved otherwise. There's always going to be haters out there, right? Some people hate my shades. Really? How can you hate these? Tesla said its gross margins remain strong and the Model Y is already profitable. This is huge, both short-term and long-term, as they do not have to wait to make money on the Model Y. It's already there. And the last point I'll talk about is Elon goes off. Obviously, I can't repeat any of what he said here on YouTube. This is clean, fun entertainment for all. I'm sure you can find a video of it somewhere out there on the interwebs. But he really laid into the stay-at-home order specifically. He is probably the only CEO that can get away with a rant like that and not have the stock price drop immediately. Because they would say things like the CEO is, unhinged or something like that. While I think he was wrong in some of his rant, sorry. Asking people to stay home due to a global pandemic is not exactly fascism. I believe it underscores how obsessive he is about this company, which excites me as an investor. His reality is actually distorted because of how crazy he is about Tesla. Anything that gets in his way of growing that company must be bad, no matter what or how smart the actual decision really is. He is maniacal about Tesla, and I love it, but he might have been a touch off base here in some of his points. But I'll just chalk that up to his deep passion about the company. Just a lot of passion there. Can you seriously question whether this guy will do anything and everything to make Tesla the most successful company ever? If you do question that, then I think you are crazy and not in the Elon crazy sort of way. Well, I will tack on a fourth point here because the earnings call went so well. Now look closely at the presentation, guys. Does it look familiar? So I started covering Tesla on my YouTube channel, and then coincidentally, Tesla's earnings presentation looks eerily similar to my channel's branding. Hey, I've been tipping you guys off now for some time that Elon might be a subscriber of my channel and he likes all my videos. Hey, I'm just saying I expect huge growth from my channel with Tesla and Elon helping me out. Balance sheet breakdown. Now let's break down the latest iteration of Tesla's balance sheet. As you all know, the balance sheet is where you separate the men from the boys. It's where you look past all the hype and headlines and find the real data. Just because it looks like a Lambo on the outside doesn't mean it's not just a Fiero disguised as a Lambo on the inside. Let's see how many of you guys remember that reference. Comment down below if you do. So here's the updated balance sheet as of March 31st. And I want to point out the one big thing that jumps out to me immediately. And hopefully it jumps out to you since I highlighted it for you. Look at the balance sheet improvements from just 1 year ago. Cash literally 4x'd. 4x'd. But then you'll have the other side, the bears, saying, well, yeah, but your debt increased as well. Debt did increase by about 30% or so. And let me tell you something right now. If I could increase my debt load by 30%, but have my cash on hand increase by 400%, I couldn't take on enough debt. I would be borrowing from my grandma, and I don't even have a grandma anymore to borrow from. I mean, this is just incredible, especially given the illness situation. So what does it mean for Tesla stock moving forward? Looking ahead, I think this was huge for the company moving forward. So let's take a look at what Tesla says the outlook is for the company, and I'll kind of weave in what I think the impact is moving forward as well. Granted, these outlook reports are meant to be sunny side up, rosy, and confidence boosting. Trust me, read Ford's outlook slide as well. You would think they have a handle on all their problems. Newsflash, they don't. But there are some great nuggets of information in there that I will highlight. We will try some public reading again here. All right, introduction. It is difficult to predict how quickly vehicle manufacturing and its global supply chain will return to prior levels. Due to the wide range of potential outcomes, near-term guidance of net income and free cash flow would likely be inaccurate. We will again revisit our 2020 guidance in our Q2 update. So what the introduction is trying to say is that the illness is affecting the business. And it's funny that Tesla did not mention the illness once. It just referred to it as a disruption or challenge. I just find it kind of funny, especially given Elon's rant on the earnings call about the shutdown and such. But hey, if I had a $750 million payout, I might be a little testy as well. Anyways, in the intro, Tesla mentions the only landmine left for the company that I see, and that is having to adjust their second quarter guidance down, which they mention again in the cash flow section and the profit section. So that really is the last unknown that could hurt them. All right, moving on to volume. We have the capacity installed to exceed 500,000 vehicle deliveries this year, despite announced production interruptions. For our US factories, it remains uncertain how quickly we and our suppliers will be able to ramp up production after resuming operations. We are coordinating closely with each supplier and associated government. Again, they acknowledge the potential impact and shortcomings, but still reiterate the fact that they believe they will deliver 500,000 vehicles this year. This is huge given all the challenges that are out there currently right now. This would be the easiest place for them to lower expectations in their guidance and have it not really hurt the stock price, given that they clearly have increased profitability and are increasing their margins and efficiencies. But they stuck with their guidance of 500,000 vehicles. Impressive. And on to cash flow. While near-term cash flow guidance is currently on hold, we are continuing to significantly invest in our product roadmap and long-term capacity expansion plans as we have sufficient liquidity. Model Y production lines in Shanghai and Berlin remain our most important near-term projects. So they feel liquidity is strong, and I think we can all agree with that. And they tell you they will be burning through some cash still, going full steam ahead on expansion plans, not on pensions or bad contracts like the other automakers. This is why I think they will explode after the whole illness situation is under control. I've been saying it over and over again. Their ability to produce vehicles has been their biggest hindrance to their growth. An expansion of their current gigafactories, which, look at this picture right here of Giga Shanghai. That's impressive. That's all new factories, guys. And the Gigafactory in Berlin coming online may start to flip the scale where they can start getting a little closer to meeting demand. Then you want to talk about explosive growth? Holy guacamole. And the last section is profit, where they state that while near-term profit guidance is currently on hold, we believe we will achieve industry-leading operating margins and profitability with capacity expansions and localization plans underway. So essentially they are better than their competitors in every way. Got it. Agree completely. Nothing more to say. Long story short on all this, they are doing better than expected. Or maybe that is exactly what we all expected. But the illness could still have an impact on second quarter guidance, which is why I believe Elon is pushing so hard to open up the Fremont factory. Its reopening is the key to not having to revise those second quarter numbers, and it might help him hit that $750 million payday too. Can't blame him for that. So the next thing you need to do is click this video right here where I gave my prediction for this earnings call. Thanks.